Garrett, I'm going to start off with you in terms of that very bullish price target that you have. Is that a 12-month price target? And what are the catalysts there, especially if we see, a recession, which many more people are calling for? Is $400 realistic?
In this video, the people have spoken about Tesla stock buybacks. Analysts are downgrading Tesla stock because other analysts have downgraded Tesla stock, and it's important on Wall Street to make sure you're doing and thinking what everyone else on Wall Street is doing and thinking, just so you don't stand out from the crowd. And an amusing Tesla bull versus Tesla bear debate. And before we get into it, if you want to instantly unlock over 100 exclusive videos, plus my 10-year Tesla stock price targets and loads of other perks, including optional access to my Tesla valuation model, join our growing community of thousands of supporters on Patreon with the link in the pinned comment. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. Tesla stock closing today, $216.50, down almost 3%, putting things in perspective. Over the last 5 days, Tesla down 11.5%. Over the last month, down almost 30%. Year to date, down almost 50%. I've said this at least a few trillion times in the last couple of months. I personally don't believe that this will age well. From Tesla's all-time peak closing price to today, the stock down over 47%. In that time, Tesla has executed near flawlessly, proved all the critics wrong, all the skeptics wrong, blown away expectations. Factors outside Tesla's control that are completely unrelated to Tesla's execution continue to pummel the stock lower. Over the last 12 months, Tesla stock down about 20%. In my opinion, Tesla stock is currently the best risk-adjusted opportunity in the stock market that I'm aware of by a long shot. I think what I'm trying to say is, don't say I didn't warn you. Now, there are many Tesla bears and skeptics out there who firmly believe the stock is headed significantly lower, and I'm talking about 35%, give or take, to around the $140 range. I would conjecture, while this is theoretically possible after all, World War III, all bets are off. I think the more likely thing that's going to precipitously decline rather than Tesla's stock price much further from here is the reputation of those bears who, via osmosis, have begun to inherit the fear, uncertainty, doubt, panic, and have lost all ability to reason. For the record, the lower Tesla stock goes, the happier I am. After all, I'm a long-term investor, not a short-term gambler. You guys and girls may recall I made a video just over 1 week ago. The thumbnail could be brutal, with Tesla stock basically collapsing. My reasoning was, well, after AI Day and the world not understanding what they've seen, after the Q3 deliveries miss, plus the macroeconomic conditions, I suspect there's a pretty good chance that Tesla's going to go down the fucking gurgler. I also pointed out this extremely risky and dangerous to be making short-term predictions about the stock price of any company, Tesla in particular, but I was that confident in my reasoning and the likely outcome that I was willing to take this enormous risk. So I'm not surprised to see Tesla stock continuing to get pounded. And I also won't be surprised if we're close to, quote, the bottom. Of course, I could be completely wrong and super embarrassed. But the lower Tesla stock goes, the more investors who previously wouldn't touch the company with a 420 quadrillion foot pole might start thinking, shit, this is getting into deep value territory. I mean, if we look forward to Tesla's earnings next year and the following year, I don't think the penny's dropped for most investors, but kind of reminds me of Tesla stock in 2019, which, just for a little bit of additional context, was, let's see here, call it 1,600% ago. In 2019, I was loading up with every spare cent. I was also pointing out that it seemed like the best risk-adjusted opportunity that I was aware of. Aged fairly well. I think we're seeing a replay of 2019. Now, I have a hunch that in addition to the many people, the groupthink, the sheep, oh my god, are we panicking? We panic? Oh, okay, panic. What do we sell? We sell growth stocks right now. When we panic, we sell, okay, let's sell growth stocks. Is Tesla a growth stock? Let's sell Tesla. I think in addition to that, there's also a group of investors out there who aren't currently suffering from fear-induced brain damage, which is absolutely a real affliction. Surely you noticed over the last few years. And that brings us to a recent poll. Results are finally in now. The poll is closed, was open for 24 hours. Just over 10,000, actually close to 11,000 votes here. Should Tesla buy back shares ASAP? I pointed out that the current market cap is approximately $690 billion in October 2022. What the actual fuck? 65.8% of respondents vote yes, 19.1% no, and 15% just wanting to see the results. In other words, about 80% of people who either said yes or no, 80% think Tesla should be buying back stock at these levels. I'm among them. And I have to say, as a Tesla stock investor, I'll be super pissed if they don't almost immediately announce a massive share buyback. Why? Where else will Tesla get a better risk-adjusted ROI than buying their own stock? In my opinion, it's literally the best risk-adjusted opportunity, at least that I'm aware of. There's plenty of others, but I don't know about them. in the stock market. And I think at this point in time, there's at least a 42 to 69% probability Tesla will announce share buybacks very soon. And if they don't, they'd better have a good fucking explanation. And now Morgan Stanley downgrading Tesla stock because, well, they need to stay in the news. I'm just kidding. I'm sure they have actually got good reasons for being wrong about why they're downgrading Tesla rather than just following everyone else.
We're also watching shares of Tesla this morning after Morgan Stanley's Adam Jonas cut his price target on Tesla from $383 to $350, warning of continued headwinds into the fourth quarter and 2023. One of the notables here, the fiscal year 2023 delivery forecast cut to 1.8 million versus the 2 million previously out there, saying that they believe the buy-side consensus range for fiscal year 2023 in deliveries is in the 1.7 million to actually 1.9 million range there.
So Morgan Stanley thinking 1.8 million in the range, 1.7 to 1.9 million in 2023. Let's do some math here. Is this possible? Is this realistic? Does this make any sense whatsoever? I'm going to use some real simple numbers just to illustrate the point here. You can use your own numbers, just trying to give a really rough example of whether or not this is realistic. We just learned the Shanghai factory, give or take, produced and delivered about 83,000 vehicles last month. Let's annualize this just for fun. Let's just see. If the Shanghai factory continues to produce at similar or even higher output over the next 12 months, how many cars would the Shanghai factory produce and deliver? Let's call it 1 million. And how many vehicles may we see produced at Fremont, give or take? I'd probably say about 600,000. So we're at 1.6 million already, not including any output at all from Austin or Berlin for the entire year. It's coming at 1.8 million vehicles delivered in 2023. We'd need just 150,000 vehicles produced for the full year in Austin and Berlin, 150,000 each. Is this realistic? I don't think so. My best guess is that each of these facilities today is already capable of producing over 50,000 vehicles in a single year, while still very early in its ramp. And while it is entirely possible, keyword possible, that the ramps at Berlin and Austin will be catastrophically slower than expected, I'm giving this extremely low odds. I think the chance of Tesla producing over 2 million vehicles and delivering over 2 million vehicles in 2023 is significantly greater than 1.7 or 1.8 or even 1.9 million vehicles. Of course, I could be wrong. There's a lot of unknown unknowns. But a different way to frame this, if Tesla this year, call it 1.4 million vehicles, keeping in mind they lost about 100,000 units of production from Shanghai with the fascist shutdowns, the futile fascist shutdowns, and ramping back up. That would already have them knocking 1.5 million vehicles out of the park this year without any unexpected interruptions to production. So Morgan/Moron Stanley, give or take, expecting Tesla's new facilities plus additional capacity eked out of their Fremont and Shanghai facilities in total to add maybe 200, 300, at most maybe 400,000 units to the entire year. Is this realistic? I don't think so. Is it possible? Absolutely. But if I were to bet, which I am, almost my entire net worth, I would be betting that Tesla's going to have a pretty good year in 2023. If we normalize Tesla's production this year to 1.5 million because of the 100,000 of production lost from the fascist shutdowns, 1.7 million vehicles delivered in 2023 would be a 13% year-over-year increase in production, with two brand new, gigantic, state-of-the-art facilities ramping up aggressively. Even 1.9 million deliveries would be just a 26% increase year-over-year. Literally everything that could possibly go wrong, in my opinion, would need to go wrong for this to be realistic. For those that don't know, the Shanghai facility in its first year of production, give or take about 140,000 vehicles. Do you think Tesla learned anything between ramping Shanghai and ramping Austin and Berlin? Oh, definitely not. And did you forget that Austin and Berlin have already begun ramping up? We're not even into next year yet, and they're already ramping. I would say, give or take, again, just really basic terms here, generalizing, I would suggest that the Austin and Berlin factories, in terms of where they are on their ramping curve, are approximately the same place that the Shanghai facility was at the beginning, maybe the second quarter of its first year of production. So if Austin and Berlin were to ramp at the exact same rate as Shanghai, and my assumptions are correct, that would mean that each facility would do, give or take, about 220,000 vehicles next year. That's assuming Tesla can't ramp any faster, hasn't learned anything, hasn't improved their factory designs, and things go relatively smoothly. In other words, I think Morgan Stanley's best case scenario is actually Tesla's worst case scenario. Unless, of course, World War III happens, in which case all bets really are off. Of course, perspective matters, and I don't mean the time horizon, which is typical of Wall Street, which is shorter than a typical micropenis. I mean a decent longer-term time perspective. What is the overall trend with Tesla's production? Is it growing exponentially? Doesn't really matter if things have shifted this way or that way, a few quarters early or late in terms of the overall trend. The question is, generally speaking, over a multi-year horizon, is Tesla maintaining approximately 50% year-over-year production growth? That's really what I'm focused on. The shape of the curve, not the minutiae of what happened this month, last week, or next quarter. The real question, are they still on track? What does the trend look like?
Does Adam Jonas actually exist? We get his notes, but I've actually never seen his face. I've been sending him emails for over 10 years, doesn't really get back to me at all. But look, his notes are really good. He's a market mover on auto stocks. I appreciate his work, appreciate his diligence on Tesla. Would just love to see his face.
Think he's a Satoshi?
Maybe.
Just a few more things from the note, if I may. So he says the company is going through peak auto margins right now, which is interesting. He talks about margin headwinds from ramping up 2 gigafactories on 2 different continents as something that could be a negative for the company. He also says that the company could be experiencing demand destruction.
You heard it here first, ladies and gentlemen. Actually, you've heard it a lot recently. According to some people who shall remain unnamed, Tesla may in fact be experiencing demand destruction. Perhaps even a collapse in demand. In fact, I can prove that Tesla is currently experiencing demand destruction, as all the Tesla bears, the experts, predicted. As we can see here, Tesla sold 77,600 vehicles in China in September. What month is now? October. So that would be last month. Interesting. And exported a total of 5,500. For a total of 83.1 thousand vehicles. The 77.6 thousand sold in September was in line with expectations and slightly below the record 77.8 thousand vehicles sold in China in June. Hang on a minute. I thought demand was collapsing in China. How is it possible that Tesla sold nearly 80,000 vehicles in China last month if demand was collapsing in China? Could someone explain that to me? I'm just trying to figure out where the demand destruction is. Where's the evidence of that? I'm just a little bit confused because I thought Tesla wasn't going to sell any vehicles in China because there was no demand.
Which is really interesting here. And also flies a little bit against what I feel like is the conventional wisdom around Tesla, which is that demand is inexhaustible, right? But that it's supply stuff that is maybe held constrained profits. So it's interesting that he's saying there is a little bit of demand destruction going on there.
And while they're also trying to ramp up the capacity and production. And so even if you've got the ability to ramp up all of the output at Shanghai Gigafactory, at Austin and Berlin, sure, that's more capacity that's coming online, but at what cost if the consumers are either opting for a different brand that's coming into market, or if they're just saying, we don't like the price that Tesla's put out there on the street.
Where do we even begin? So a couple of things. First of all, Tesla's definitely fucking up here. The world isn't transitioning to EVs, and there's a great risk that despite them ramping up production capacity exponentially, they won't actually be able to sell all the vehicles they're planning on selling because demand is in question. In addition, regarding the comments about Tesla's price, it's true. Not everyone can afford to buy a Tesla at this point in time. And since Tesla currently has 0% gross automotive margins, it's literally impossible for them to lower prices of their vehicles without going bankrupt. So that's not going to happen either, so a really good point there. Demand destruction, ramping capacity, but maybe they won't be able to sell all the vehicles they produce. And they don't have any pricing power whatsoever, so Tesla's obviously going bankrupt. I think I'm going to sell all my Tesla stock and go short. $140 price target. You heard it here first, folks. That puts me within spitting distance of the class clown himself, whose current price target for Tesla stock is a mere $73 per share. I'm less than double that, but for good reason, because obviously no demand, no pricing power, no nothing. Tesla's going bankrupt. You heard it here first. And speaking of Mr. Humiliation Fetish himself.
Joining us now is the Tesla bull, Garrett Nelson with CFRA. He's got a strong buy rating, a $400 price target on this stock. GLJ Research's Gordon Johnson is way more bearish on the stock. He's got a sell rating with a $73 price target, the lowest on the street. You know, it's interesting, guys, because it's rare that you have a bull bear debate and you've got people so far away from the actual price of the stock. You're really on opposite ends of the spectrum.
Damn, I almost thought she was going to say opposite ends of the bell curve. That also might be true.
Garrett, I'm going to start off with you in terms of that very bullish price target that you have. Is that a 12-month price target? And what are the catalysts there, especially if we see, a recession, which many more people are calling for? Is $400 realistic?
Yeah, thanks for having me. Let's not forget that just 3 weeks ago, the stock was above $300. So while the stock has come in, sold off sharply over the last few weeks, that we think $400 is still achievable over the next 12 months. Simply put, we view Tesla as one of the market's best earnings growth stories over the intermediate term.
It's hard to argue with Garrett on this point. Let me know in the comments below. Any companies of similar scale likely to see similar earnings growth in the next few years? Let me know below. I can't think of any.
If you look, Tesla earned adjusted earnings of $2.26 last year. We see their earnings growing to about $7 by 2024.
So a little bit of context, my bear case for Tesla stock EPS 2024, around the $7 mark. I've personally assigned about a 3% probability to my bear case, less than 1 in 30 chance. It's possible, but I'll be quite surprised if Tesla earnings isn't about 50% higher than what Garrett is expecting. Garrett with a $400 price target on Tesla stock today. Something to consider.
So, at a time when inflation is really weighing on earnings growth, broadly across the entire market, and consumers are pulling back on spending. There's really no other company out there that has this type of earnings growth trajectory. Even if you assume the analysts are wrong and you haircut those estimates by, say 20 to 30%, it's very impressive earnings growth. And it's being driven by increasing production and sales at the 2 new factories that they just started up in Texas and in Berlin.
Gordon, you've been a long time bear on the stock. $73 is a long ways away. Is there a particular catalyst at this point that you see finally coming home to roost? Because the argument had been, in the past, and I'm going way back maybe.
Ladies and gentlemen, watch closely as Melissa Lee low-key roasts Gordon Johnson being completely fucking wrong about Tesla stock for literally the last decade. Literally. Go check. There's a clip of Gordon talking to Melissa Lee about Tesla, suggesting there was no way they could eke out any cost savings in the laptop batteries they were putting in their vehicles. There was no way they were going to get their Gen 3 vehicle that was more affordable. And Tesla was worth, 3 cents per share, split adjusted, give or take.
Accounting issues, the vehicle tax credits are going to expire, all these different things that have sort of come to pass, and the stock hasn't hit, that very low price target.
Yeah, Melissa, thanks for having me. Good to see you. Long time no see. So Tesla is effectively valued as a high-growth company. And the problem is they're no longer growing.
Get the fuck out of here. I mean, his opening remark, Tesla's valued like a growth company, but they're not growing. I mean, this is his opening statement. Didn't spend any time buttering us up, cherry picking to build a slightly more credible foundation for this absurd statement. Just comes out, straight out and says it. Tesla's not growing. Now, I'm not one to kick a man or a chicken when they're down, but I do just want to point something out. Based on Gordon's response here, his primary thesis, the main factor driving his $73 per share price target for Tesla stock is that they're valued like a growth company, but they're not growing. This is literally the single most absurd thing Gordon has ever said, at least about Tesla.
The issue is very simple. Tesla in Q3, their sales were 343, but if you look at Q3 and Q2 versus Q4 and Q1, their sales were actually down, so they're no longer growing. Why is that a problem? The answer is simple. Tesla is valued at more than the next 10.
Where do we begin? First of all, I want to direct your attention to the graphics on screen now. As Gordon was sharing his thoughts, CNBC already had his talking points, meaning Gordon has sent his talking points to CNBC so they could put them up on screen as he shares them. Let's read Gordon's talking points. I quote, Tesla is, quote, no longer growing. Oh, by the way, just to drill down onto the reasoning, Gordon cherry-picking in a couple of quarters, including quarters that involved 100,000 units of lost production due to the futile fascist shutdowns in Shanghai and ramping back up, and using that, without any context, to imply that Tesla is no longer growing. Absurd. Let's continue. Quote, Tesla, no longer growing. Lead times down, despite production being up. Can we just talk about this? Lead times down, despite production being up. If production is increasing, I know this is really going out there, lots of logic involved. If production is increasing, that means there's more vehicles available to people. That should put downward pressure on lead times, right? This point literally makes no logical sense. The use of the term despite, lead times down despite production being up. This is absolutely nonsensical. Second point, selling around 1.2 million cars a year, which is impressive on its own. Round of applause for Gordon to actually admitting the reality of this. It is impressive, but not for a company valued at around $800 billion. Again, Tesla's just a car company, valuation makes no sense. Let's ignore the growth, the industry leading margins and all the other stuff as well. This is the best argument the guy's got. The very first bullet point. 2 things that make literally no sense in the very first bullet point. Gordon is getting desperate, to say the least.
Largest automakers combined. They're valued at more than the next 10 largest automakers combined, despite selling just 2% of the cars those automakers sell. And when you look at Tesla's lead times, you can now get a Tesla car effectively in a week
Oh, gee, that's a bit worrying. Let me just double check here. I'm a bit concerned. If Gordon's right, I might have to kill myself and or just sell all my Tesla stock. Let's see, maybe a Model Y, probably the most popular, best vehicle. Let's order one right now. Here we are, Tesla website. I've got to switch to Australia because that's where I live. And if I'm ordering one, I have to get it delivered to me. Confirm location, yeah, good, fucking whatever. Let's see here. Model Y, estimated delivery, February 2023 to May 2023. How many count here? We're October 22, November, December, January, February, March, April, May. So 4 to 7 month wait time. Nice. Maybe different specs will come a bit sooner. Let's try the performance. April to June 2023. Well, hang on a minute. October, November, December, January, February, March, April, May, June. Could be waiting up to 8 months to take delivery of the Model Y. Maybe we'll try the Model 3. Want to be fair on Gordon after all. Model 3, February to May 2023. How about we try the long range? Same time. How about the Model 3 Performance? I thought we heard that you could essentially get a Tesla vehicle delivered instantly. In fact, wait times are so short, the day before you actually purchase your Tesla, it's already arrived because there's no demand. I don't know if you guys or girls are aware, but Earth is a big place with many locations to deliver vehicles to. Tesla is also aware of this. If I, as a customer, attempting to order a Tesla in my home country, am having to wait 4, 5, 6, 7, 8, 9 months to take delivery, I think Gordon's previous statement about wait times was not entirely accurate. Essentially. Now, if you're not the sharpest tool in the shed, you may be already typing out a comment, hey Steven, you cherry picked, man, why'd you use Australia? Why? That's not fair. The wait times in some other regions are shorter. Before you self-immolate in the comments, just please think through the logical implications of your statement and your lack of reasoning. Here's a hint if you can't quite figure it out. In order for you to have a logical argument about wait times and demand, we'd need to see wait times everywhere on the planet, given the fact that Tesla's only producing vehicles on 3 continents currently and does a lot of exporting and importing. We'd need to see wait times in every single region on Earth of a similarly short nature before we could really infer a whole lot about underlying demand based on wait times. Hopefully you guys understand this, but I just wanted to save a few people from barbecuing themselves in the comments.
And for all of their variants across China, which means their backlog is gone, they're no longer growing there. Their sales in Q3 in Europe were actually down versus Q1, and there's effectively no more backlog in Europe. You can get a car immediately there. And in the US, the lead times for the Model 3 are roughly a week, and the Model Y are roughly 3 weeks. So this is a company that's no longer growing.
And he's really tripling down on the no longer growing thesis. I do want to take a moment to point out the ridiculousness of this. This is the best argument this guy's got now. Claiming that Tesla is no longer growing by cherry-picking data from a quarter in which the Chinese Communist Party forcibly shut down Tesla's Shanghai factory, causing them to lose about 100,000 units of production during the shutdown and then ramping back up. This is the best argument he's got.
And you're looking at sales growth that is now declining. And I think the issue is, unless Tesla cuts prices significantly, we think Q4 growth is going to be down versus Q3. So you're looking at a company that's either going to see no growth or margin debilitating price cuts to move units.
Margin debilitating price cuts. Let's talk about this. Today, Tesla has margins, gross automotive margins. In other words, the profit they make per vehicle sold is 2 to 3 times higher than the average in the automotive industry. Tesla could literally slash the price of all of their vehicles globally today and still have industry-leading profit margins.
And I don't think you want to pay 100 times earnings for that company when the auto industry trades at 5 times. And when people say Tesla is more than an auto company, they're not. 95% of revenues from selling cars, the other 5% from an energy division. But if you want to give them that, you have problems. Their energy division has single-digit gross margins, which means it perpetually loses money on the operating line. So I'd like to know how Garrett would value a company that loses money in their other division, outside of cars.
And I'd love to know who's paying Gordon. Did I? Nah, I didn't say that out loud. I think you guys imagined it. I think he genuinely believes what he's saying. After all, his arguments make so much sense. So let's recap. The fire sale on Tesla stock continues. Market cap now well and truly under $690 billion in October 2022. So cheap, such a bargain now, at least in my opinion, and that of many Tesla stock investors, that the vast majority of people living in this Tesla echo chamber want Tesla to announce a share buyback ASAP. Hey Tesla, are you listening? As we see, Tesla has absolutely no demand in China. Sales have collapsed. That's why they sold literally 0 vehicles in China last month. Oh wait, no, sorry. They sold nearly, I'm not sure what happened there because I was pretty sure that all the geniuses were saying that there was no demand in China. Yeah, I don't know how to explain that. But anyway, let's just move on. I'm sure it's nothing. And we heard from Garrett previously, a Tesla bear, who's finally flipped with a $400 per share price target on Tesla stock. And then on the other end of the bell curve, Gordon Johnson with a $73 per share price target, which if you double is approximately $140 per share. Coincidentally, Tesla stock continues to slide lower, and I continue to emphasize that I still believe it is the best risk-adjusted opportunity that I'm personally aware of in the stock market by a significant margin. Doesn't mean it can't go lower, just means I'm licking my lips even more ferociously. Anyway, I hope you guys and girls enjoyed the video. Let me know in the comments below if anyone's been picking up Tesla stock around these levels, and if not, why not? And also, don't forget you can join Patreon and unlock a ton of exclusive content. I think we're 174 exclusive videos now and counting, plus instant up-to-date access to my Tesla stock price targets. And yes, I did post yet another video on Patreon today before I posted this because it's what I do. See you over on Patreon. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you want to support the channel and instantly unlock over 100 exclusive videos, plus my 10-year Tesla stock price targets and loads of other perks, including optional access to my Tesla valuation model, join our growing community of thousands of supporters on Patreon with the link in the pinned comment. You can also pick up some Tesla, Elon, and investment-themed merch in the merch store. And if you're still watching, you're awesome. Please let me know your thoughts on today's video in the comments below, and click the card on screen now to watch the next video.